Welcome back to Tesla Daily News Podcast. Today is Tuesday, December 16th, 2025. In the next few minutes, we're digging into the biggest Tesla developments that could actually move the stock, real-world robotaxi testing in Austin, fresh signals on full self-driving progress, and a very concrete reminder that Tesla Energy is becoming a serious earnings driver. Let's get into it. Story 1. Tesla Robotaxi is now being tested in Austin with no safety driver. The hook is simple. A Tesla Model Y was spotted driving on public roads in Austin with nobody in the driver's seat, and Elon Musk confirmed that testing has begun. Context matters here. For years, Tesla's valuation has included a meaningful autonomy premium. Investors have heard timelines slip since Autonomy Day back in 2019. A real-world driverless test, even if limited and geofenced, is the kind of milestone that can shift analyst narratives from promise to execution. Details. According to reporting from Electrek and Business Insider, videos circulating online show a Model Y robotaxi operating without a human safety monitor inside. Musk also indicated the company is moving quickly, with prior comments suggesting safety supervisors could be removed within weeks. Impact. If Tesla can demonstrate consistent, incident-free driverless operations on public roads, it strengthens the probability that robotaxi revenue is not just theoretical. That can expand Tesla's long-term total addressable market and support higher multiples. The flip side is also important. Any crash, regulatory intervention, or evidence that the system still relies on remote support could hit sentiment fast. Takeaway. For investors, the key is not the viral clip. The key is whether Tesla can scale this from a few cars in a single city into a repeatable, regulator-approved service model. Story 2. The market is refocusing on what real autonomy means, and that affects how investors price FSD. Hook. The conversation is shifting from FSD is getting better to is Tesla actually operating beyond assisted driving? Context. Most consumer vehicles today, including Tesla's standard FSD offering, are considered level 2 driver assistance in practice because the human is responsible. Tesla's long-term bull case depends on crossing the line to true driverless operation where the system is responsible. Details. A German tech outlet, MobiFlip, highlighted that Tesla has historically operated at level 2 or level 3 behavior, depending on conditions, and that moving to truly autonomous operation is a different category. Separately, Barron's ran testing impressions of Tesla's latest full self-driving version, keeping attention on real-world performance. Impact. This matters because the market will pay for autonomy when it becomes a scalable product, not just a feature. If Tesla's Austin program is the beginning of a supervised rollout toward driverless ride-hailing, the autonomy narrative can re-rate upward. If it stays limited, it may cap the autonomy premium in the stock. Takeaway. Watch for measurable indicators, expanded service area, higher fleet count, safety metrics, and any formal partnership or permitting language from local or state regulators. Story 3. Tesla Energy gets a headline moment. xAI's Colossus 2 reportedly running on Tesla Megapacks. Hook. 420 Tesla Megapacks reportedly power xAI's Colossus 2 data center in Memphis, with a stated value around $400 million. Context. AI data centers are extremely power-hungry and grid interconnection can be slow. That creates a near-term market for large-scale storage that can stabilize power, manage peaks, and act as a buffer. Tesla's Megapack sits right at the intersection of AI infrastructure and energy reliability. Details. A Russian tech outlet, IXBT, cited a Tesla employee stating the site is powered using Tesla Megapack industrial storage. The article claims 420 Megapacks and about $400 million in value. Impact. If these kinds of deployments keep stacking up, Tesla Energy can become a larger share of revenue and, importantly, a higher margin growth engine compared to the auto business during pricing pressure cycles. Investors should also note the customer concentration and headline risk. Linking major deployments to Musk-adjacent companies can raise questions about pricing, disclosures, and governance, even when the business fundamentals look strong. Takeaway. The big investor question is margin and repeatability. One massive project is great. A pipeline of utility and data center deals is what changes valuation models. Story 4. Powerwall demand is rising in Taiwan, a small data point that supports a bigger trend. Hook. Regional demand signals for Powerwall continue to improve, with Digitimes flagging rising Powerwall demand in Taiwan. Context. Residential storage is a different business from Megapack, but it feeds the same strategic flywheel. More storage adoption strengthens Tesla's energy ecosystem, software opportunity, and brand positioning as a full-stack electrification company. Details. In its weekly roundup, Digitimes highlighted Powerwall demand rising in Taiwan among the most read regional supply chain stories. Impact. On its own, Taiwan demand won't move Tesla stock. But for investors, these incremental signals matter because Tesla energy growth tends to show up in quarterly numbers after long lead times. Stronger global demand supports higher utilization and improved operating leverage. Takeaway. If you're tracking Tesla fundamentals, keep an eye on energy storage deployments and any commentary about backlog and gross margin in the next earnings cycle. Story 5. Insider selling headline. Kimball Musk sold more than $25 million of Tesla shares. Hook. Elon Musk's brother and Tesla board member, Kimball Musk, sold 56,820 shares, totaling more than $25 million, according to reporting based on an SEC filing. Context. Insider sales are common, and executives sell for taxes, diversification, and planned trading programs. But the market often reacts because Tesla is sentiment-driven and insider actions can be interpreted as confidence signals. Details. Benzinga and Yahoo Finance reported the sale and noted that Kimball Musk has a history of regular trading activity. Impact. The direct financial impact on Tesla is zero. The market impact can be short-term, especially if traders pair it with any broader risk-off tape. For long-term investors, it's more relevant whether insiders are buying or whether multiple executives sell heavily around the same time. Takeaway. Treat it as a sentiment data point, not a fundamental thesis. The bigger drivers remain deliveries, margins, autonomy progress, and energy deployment growth. Story 6. The AI bubble narrative is returning, and Tesla sits inside that cross-current. Hook. Analysts quoted by Bloomberg, via Russian outlet Kommersant, discuss the possibility of an AI-linked equity bubble deflating in 2026, and Tesla is named among large tech-linked winners that could be sensitive to sentiment shifts. Context. Tesla trades partly as an auto company, partly as an AI and robotics story. When markets are enthusiastic about AI, Tesla often benefits from multiple expansion tied to autonomy and robotics optionality. When markets rotate away, Tesla can get pulled down even if car fundamentals are stable. Details. The commentary pointed to investor concerns about huge spending and uncertainty about monetization timelines across the AI ecosystem. Impact. If markets de-risk AI narratives, Tesla may face more pressure to prove near-term execution, tangible robotaxi milestones, software revenue growth, and energy profitability. The upside is that real driverless testing in Austin is exactly the kind of proof point that can help Tesla stand out from pure hype. Takeaway. In 2026, Tesla may be judged less on stories and more on verified deployment, robotaxi expansion, take rate and retention for FSD, and energy margins. Before we wrap up, a quick reality check on what we did not see in today's article set. There were no fresh official delivery numbers, no new Tesla earnings guidance, and no confirmed new factory capacity updates. That means today's biggest stock-moving theme is autonomy execution, with energy as the second pillar. Recap for today. Tesla is now testing driverless robotaxi on Austin streets, which is a major credibility milestone for the autonomy thesis. Full self-driving is back under the microscope as investors focus on what counts as real autonomy. And Tesla Energy keeps racking up signals of demand, highlighted by a massive Megapack-powered AI data center claim and improving Powerwall demand in Taiwan. What to watch tomorrow? Any follow-up evidence on the scale of Austin testing, any regulatory commentary, and any additional details on energy storage deployments that include verifiable contract terms. If you want daily, investor-focused Tesla coverage, subscribe to Tesla Daily News Podcast and follow us for the next episode. Thanks for listening.